is I'm going to introduce Dean. In his day job, he is the head of capital markets and does have a background in banking and finance. And his particular interest and his focus now is on sustainable finance. And I think I'll hand it over to him and he can dive into the topic. We have this session will be open until 3:57, and 5 minutes before 3:57, I will give Dean a clue and everybody so that we're going to be 5 minutes to the end. Over to you, Dean.
Well, thank you very much. And I had a quick look at people coming in and I recognise some names up there, and I feel we've certainly got some knowledge here which will be great to share, because I've got some thoughts around the opportunities for a impact investment market. And as you heard, I've sort of came out of a traditional banking background, have been involved in capital markets, so raising debt for various organisations and companies. And then some years ago, probably in the last 5 or 10 years, the theme of sustainable finance came up, and we started recognising that the funding has more to it than just simply accessing capital, but there's also the connection for investments into the impact they have, both environmental and social. So the idea of impact and really the having an impact on our country, on our community. And when I look at it, there seems to be pools of money out there, and certainly philanthropy has been a big role in New Zealand and other parts of the world too, in terms of making grants to support various causes, and they'll continue to be a role. There's a big pool of money in funds management, as we're aware, KiwiSaver and the like, and actually the government plays a big role in terms of supporting a lot of activities in terms of social delivery and the impact on the environment. But when I look at it, the opportunity is how can we bring these pools of money together and support projects that do deliver these important benefits or social good, if you like. There's various views and conceptions around whether in fact we should be having private investors earning returns from delivery of social good or social services. And Razi, I thought I'd get you to actually put the poll up. For some reason I'm missing the button on my screen now, but we thought we'd have a quick poll just to get a view from the audience as to where they sit on that topic before we move on.
Okay, here you go. The poll should be on your screens.
Well, that's rolling. A question's just come in from Deborah, and she's interested to hear your thoughts on how the governance mindset may need to change to fully support impact organizations.
It's a really good question, and we did some work involved in an impact project in South Auckland, and I'll just talk to that briefly. So that was aimed at delivering, or the intervention was to improve reduced youth reoffending in South Auckland. And probably one of the learnings from that is exactly that point, is that the mindset of the organisation, the social provider, who'd been working in this space for many years, really did need to change. And so, and in some ways, on the whole, the feedback from that was it was a really positive experience, because it did put some rigidity around the way they managed themselves. But it was a big change, and I think it was probably a bigger change than what they had expected, and really did take, I'd say, take some adjustment for people to move from being having a culture where they had been used to focusing primarily on just doing what they're good at, and that is connecting with youth and getting results, to realising then that they actually have to, they're being measured and there's an impact they have to achieve. And so there's actually some pressures on discipline and recording of and I suppose data collection that they need to do as well. So it's a really good point. I think it's something that any organisation will need to be conscious of, is just that there is perhaps a change in mindset when you go down this route.
Thank you. Your poll has just closed. If you wanted to come back to that, it's got a number of questions coming in from the audience, so you can choose the direction.
Shall I just share the result first, Dean, and then you can go from there?
Sure.
That's a pretty good indication, and
look, I asked that question because, depending on people's views, one of the rejections that I've had from time to time is saying, well, look, it's just not appropriate for people to invest money or private capital to benefit from delivery of social services in particular. I don't think there seems to be quite the same feeling around environmental, but in fact, in my opinion, I think David Woods is in the audience, so I'll be, if I'm able to, David, I might turn to you at some point here and just get you to perhaps fill in on some of your views around how we take this forward. But certainly by bringing these pools of money together, the different pools of money I talked about, philanthropy has a different focus. It is definitely focused first and foremost on the impact that it has and makes grants. There's no expectation of return, let alone return of capital. Whereas your commercial funds have a duty to manage and earn a financial return. And so one of the challenges, and we're getting onto this, perhaps some of the barriers that we face, is some investment managers don't believe they can take into account the externalities or social good. So even though there may be a big impact, they believe they're only there to achieve the best financial return for their clients, for their superannuation investors. So they're quite polar opposite views. And what we're seeing is perhaps a hybrid view coming out saying, well, actually, there is a way that you can achieve a middle ground and actually bring these two pools of money together. And that could be quite a sizable opportunity to really fund some important projects going forward. So that's where I sort of see it. I was going to sort of put it out there to see whether there's further questions, or Dave, I know you're there. If you are happy to add some comments, but clearly your experience in this area is immense. So happy to drag you into the conversation.
Thanks, Dean. And I think that the short answer is that more and more philanthropic foundations are saying, well, hang on, if we give a grant, that money is gone. If we give if we make an investment, we have some expectation of getting the money back and being able to recycle it and use it again. So I think that is changing the mindset of many philanthropists, particularly in the North American market. It's very interesting how just this week, people in the US are saying the S in ESG has got much bigger as they see jobless claims go up to 26 million. And the other side of it, I think in certainly among many European investors, you see younger people pushing the asset managers to say, I want to see a return that isn't just a financial return, but what are you doing for social justice and what are you doing for the environment? So this whole move towards impact-weighted accounts is very important. Dean, it's your show. I'll shut up.
No, thanks for that. And I think there's a question that's popped up. What is ESG? So I'm just touching on that. So environmental, social, and governance. So these are very a big focus going on from investment managers, largely driven. And if anyone who joined the earlier presentation by being Glassner around his, Kogo app, which was previously called the Conscious Consumer. I'd say that the conscious consumer is now morphed to the conscious investor, and people want to know where their money is going. And so, to David's point, there is a focus on both the environment, social aspects of what companies do, and governance. So those three things come together. We call them ESG. I think and the environment was the big focus, probably up to January. Now with COVID out there and unemployment rising, then the social's taking over as a very important aspect. And I think too, you'll find out that companies will be measured on how they respond in this environment. So it's one thing to have policies and positions around ESG, as we call it, but behaviours are what will be measured on. So how companies respond in this environment will be quite important, I believe, in terms of how consumers and investors respond to them going forward. But so thanks, David. I think that's really important, and I think that the point being that one thing you touched on was the change from the philanthropic investors who grants do get made, they don't come back. The ability to recycle capital is important. I think in New Zealand we're starting to see that aspect increasing as well. I just wonder whether there's any other. I'm just conscious of the questions that I may be missing as well. So if there's.
You've had a number of them coming up on the window. Do you want me to call some out at you?
Yeah, that'll be helpful.
Do any New Zealand retail banks consider Islamic financing models which forgive/treat interest differently?
Really good question. I haven't seen that in the New Zealand context. I have seen it overseas with Islamic bonds, which are an example, but I'm not aware of that in the New Zealand market, but I could be wrong. Okay, so did you have another one there?
Sure. What do you think about an investor return being capped?
Look, I have seen that, and in fact, on that particular example I gave, which was on the social bond in South Auckland, investors were capped in terms of the maximum return they could get, so they had downs. Well, we split it up. Some investors didn't want to take capital risk, so they basically had a floor at zero, so they got in between zero and a maximum. Other investors were willing to take more risk, and therefore they could lose their capital, but they could earn a higher return. So the benefit from that structure, and if we look at it, why did the government try that pilot out? And the answer is that they were doing something which was truly innovative, and they're introducing a new methodologies in terms of working with these youth. It was done on a smaller scale. The results and the data that came out of that, well, it's still ongoing, but the results have been very strong to date. And it then allows them to say, okay, well, we've tested it out, we know it works, or it doesn't, depending on which way it goes. But you can then take that experience and then roll it out more broadly. So it's a way of the government taking innovation steps without taking the risk. So they leave the private investors carrying the risk for the success. And the hope is that it does succeed and the investors get a return, but the bigger return will go to the community and to the government, because if you reduce youth reoffending, then clearly that has a long-term flow-on impact in terms of people being incarcerated and the harm that crime does to the society. So that was the thinking behind that project. And yes, you're right, you do see caps go on from that point of on some products.
Thank you. You've got a couple other questions. Can I keep darting them out at you? How do you feel about this?
No, they'll be fine.
I'm just choosing these through the chat window, so if others want to add, I see a couple coming in. Currently, companies strive to increase returns to investors. How do you change this so they split these returns more fairly with customers and employees? So that's a lot about how do you distribute wealth more fairly. Do you have some thoughts on that?
Look, I think that's a great question, and it's true. If you look at it, the stakeholder has traditionally been viewed by companies as being their equity holders, and that's come out of many decades of theory around what the role and the responsibility of the board. I think those days are gone. I think ultimately any board that thinks that their only responsibility is to shareholders, that they're going to in for a shock, because the stakeholder is much broader than that. Staff are a big stakeholder now, and staff engagement tells you a lot about the heart of the company. Consumers play a big role, and I think that's where the power of the consumer is what is going to drive behaviour, both in terms of consuming the product, but also I talked about investors being consumers. So where you put your investment money, and there are ethical investment funds who are going to scrutinise. Most funds have always negatively screened for companies that they won't invest in. Well, that scrutiny is becoming a lot higher, and so look, I think a board today would tell you that they would view their stakeholders as a much broader group of stakeholders than just the investors. So I think that's a trend that started. I don't see that changing.
Great answers, thank you. Still have obviously a very engaged audience because the questions keep rolling in. This one I'm going to paraphrase. It's coming from, let's see, it just moved from somebody coming in from the UK, Stephen Johnson. He says the government has a rather large role in working at how you could do, let's call it social financing. What do you think the role of the New Zealand government should be or could be?
Look, that's a great question, and I've looked at some of the UK approaches, and again, David probably is more familiar with them than what I am, but it would be great to see to be able to copy some of those initiatives over there as well. And indeed, the social bond pilots were an example where we tried something that had been tested in other countries beforehand. So I'd like to think that in New Zealand we would look around and see what other countries are doing and adopt innovation that's working. And as I say, I think that the largest impact investor in New Zealand is the government. Ultimately, they're the ones who are paying for the delivery of social and environmental outcomes. The question I've got is, are they getting the most impact from that spend? And if not, is there another way of going about that? And that could be simply about using other mechanisms to deliver these results, and actually paying for performance rather than just paying for something per se. So we often hear politicians say we're going to spend more on health, but that ignores the fact of what is the impact you're getting for that spend. So I think in New Zealand we've had quite a bit of data collected. There's now a living standards framework, the wellbeing budget. I think these are all great initiatives. There probably now needs to be a thought as to how we then actually mobilise capital to actually support those initiatives. So data collection and performance measurement is one of the key parts, and I think that's what's going to probably be important for New Zealand.
There's thank you. There's a couple questions coming up that are more, let's call it housekeeping, which is, will these questions be available? And what we will do afterwards, assuming technology works in our favor, is we will be copying all of the questions and all the chat that's from this window on the side, and we'll be pasting that into the shared window. The idea is this is all supposedly saved to some cloud somewhere, and that we'll be able to have access to this document. We do have a tech problem in that none of us can copy right now for some reason.
I was just reading on the Google, and that's probably because we're saving the recording to the cloud, that you're not able to save. That looks like you can't copy the chats.
We'll do our best to solve that. I see there's another question here. It says, do you think that investors will accept lower returns on demonstrated impact? I'm just curious if you've seen trends to date that actually show that people are willing to accept lower returns if there's a social or demonstrated impact.
Yeah, I think the answer is definitely that is the case. I mean, I guess the question is, which investors are we talking about? Because what I found is when you go and engage with investors, you'll get different responses from different investors, and certainly but one of the feedbacks we got when we were engaged with investors on social impact pilot bonds at the time was they were willing to risk returns, and depending on who they were, I suppose the most common response was, look, we're willing to risk return and even return nothing if it's to achieve the outcomes this is intended to achieve. Risk of losing capital was a big issue for people, and ultimately whether you're a foundation or a commercial investor, depending on what your mandate is, largely you're expected to protect that capital, and so that was certainly a very strong feedback. Losing capital was not desirable. Accepting a lower return for an impact return, that was deemed to be the common feedback was that most investors would see that as acceptable.
Thank you. Some of these questions are getting a bit longer. I'm actually really curious how the temperature check, we've got about 5 minutes to go to the end. And so just wanted to do any last things that you wanted to achieve in this conversation. Dean? Well,
look, I think the main thing I was going to suggest is, if there are people, certainly we'll answer the questions and that come through on the doc, but also if there's people who are wanting to stay engaged on this theme, then it'll be good to get their details, and then if there's, it'd be good to look for opportunities to stay engaged and potentially continue working on this topic. So I think that was my main point I wanted to leave you with, is that rather than having a 30-minute chat and be in the end, then it'd be good for this discussion and others to then be able to carry on as people wish to engage.
Thank you very much. Are there any things, I just saw somebody was pointing to Akina as another foundation or another organization that's doing some work in this space. I think
that's absolutely right. I mean, Akina's doing some great work. In fact, there's they're doing some great work, and there's a number of, when I look around, it's great to see the momentum that's building in New Zealand. You know, I am quite hopeful that we will continue to see this area of impact evolve. So it's got increasing momentum every year. So with the likes of David playing a key role, so we're seeing progress. It may not be as fast as we like, but I think I'm hopeful and confident that you know, as these sorts of forums and getting people together, we can share knowledge and experience and hopefully get some results.
Cool. Question close to my heart just rolled in from Gemma. Are community share models on the horizon in New Zealand, allowing community ownership in addition to low interest government loans plus investment tax relief? Disclosing that I work with communities to build collectively owned assets. So.
Look, I'm not. Look, I would say, look, there's definitely a number of financing structures and mechanisms that are coming through, and I think they're all open for investigation, and it's a matter of working out, you know, what is the funding ask, who can we get involved in that. I think if we could bring together these pools of money and have a proper impact market, then really that would enable these sort of ideas to be looked at very closely, and there'll be a greater capacity to fund a whole lot of these alternative structures in terms of you know, delivering for various projects and outcomes. So yeah, look, I think the answer is, look, going forward, I'd hope to think that we can say yes to a lot of these things. Yeah, at this stage, I think the market's still in an evolving state, and we've got some work to do to sort of bring people together.
Thank you so much. That was such an informative and quite dense 30 minutes. Can I suggest again, everybody goes to the Google Doc if you want to stay informed on this, and please put your contact details there. And Dean can follow up with these questions. We will paste the full thread of this into that shared document at the end of the conference once we actually have access to this file.
Yeah.
We are.
His profile is on page 9.
Oh, and Dean's profile is accessible on page 9 if there's any other questions. Thank you so much for everybody on this one. I would say you've got 3 minutes to read your program and choose what your next session is. It will be your last session before we reconvene back in the Aroha room for our closing.